Hi, I'm Annapurna M, tax expert from ClearTax. In today's Union Budget 2020, FM Nirmala Sitharaman announced some changes for MSMEs as well as large enterprises as well. First of all, under Income Tax Act, the tax audit limit has been increased from Rs 1 crore to Rs 5 crore subject to a condition. The condition is that the cash transactions done in a financial year cannot exceed 5% of the total receipts or total payments respectively. Moreover, the due date for filing the tax returns, that is income tax returns, for those businesses or professionals who are subject to audit under any law for time being in force has now been pushed to 31st October. Earlier it was 30th September. However, the tax audit reports will have to be filed by 30th September itself. So there is a 1 month time now. Moving on to the indirect tax. We have GST law. There are a couple of amendments made to the GST law. Let us look one by one. The Ladakh has been now added to the definition of union territories. There was merger of Daman and Diu, Nagar and Haveli last year, and this also has been incorporated in GST law. Further, now Jammu and Kashmir will have its own appellate tribunal. Moving on, we have provisions of composition scheme being amended. The earlier composition scheme could not be availed if you make interstate supply of goods and supply of exempted goods, but now services also have been added to this list. Further, the grounds for cancellation of GST registration is also slightly amended. Now, the distinct persons can have an option to voluntarily opt out of the registration of GST, but provided they are falling within the threshold limit for GST registration, as well as they do not fall under section 24, wherein compulsory registration is involved. Moving on, we have section 122, which talks about penalties in case of any offences or non-compliances of GST provisions, wherein now a new provision has been added, as in a new subsection has been added. ITC which is fraudulently utilized, or it could be ITC utilized against a non-compliant invoice, right? Then further, like supplies actually have not been made against certain invoices raised, or the invoice itself is lacking some the GST provision. It's not GST compliant. The invoice itself is not GST compliant, right? In all such cases, if a person is actually found to be the beneficiary of ITC claims being fraudulent ones, then in that case the penalty will be levied, and the penalty will be equal to the amount of tax evaded or amount of the fraudulently claimed ITC. Earlier it was 10,000 or the amount of the tax evaded, whichever was higher. Now it is straightaway restricted to the amount of ITC fraudulently claimed or amount of tax evaded. So this is a newly inserted subsection 1A under section 122. Moving on, we have section 132. Section 132 was for punishment of for certain offences. Under this provision as well, you see that there is beneficiary of for fraudulent ITC claims being added, and he will also be coming under the ambit of this particular provision. So we see that wherever the ITC flow is involved, right, and such ITC is found to be fraudulently claimed by any of the persons in the supply chain, then the persons thereafter who have actually utilized such ITC will also be coming within the ambit of section 122 and section 132. Now, moving on to the next one, we have the customs duty and customs law provisions being amended as well. First of all, electronic duty credit ledger has been now introduced with provision for duty credits to be directly credited to the ledgers of such exporters. So this will help exporters to get their duty credits, and duty remissions will no longer be there. Next, you have steps taken by the government for MSMEs, primarily to actually provide them with more credit, right, and also to allow them to claim to improve or to meet their capital requirements. Several measures have been taken. The first one being amendments to the Factor Regulation Act. in order to ease the regulations a little for MSMEs and to boost the MSME sector. So next, you have amendments also to be made in order to enable NBFCs to provide invoice financing facility through TREDS to such MSMEs who are interested in discounting their bills. Moreover, you have a new provision added known as the subordinate debt scheme. A new scheme will be introduced called subordinate debt scheme for MSMEs, and here the banks will provide loans to MSMEs but under the guarantee given by Credit Guarantee Trust. Also, app-based financing facility will be made available to MSMEs, right? So the process will be very seamless for MSMEs in the coming months. Moving on, we have certain changes or revisions made to the customs duty, import duty of certain items. We have, first of all, certain finished goods that's being always imported, by the domestic manufacturers and domestic players, such as furniture, footwear, electrical appliances, toys, machinery. On all these, the import duty has been increased. So by doing this, what happens is it will give boost to the domestic industry, domestic players to be able to manufacture more, and it will boost the Make in India initiative of the government. Moreover, the import duty for certain raw materials have been reduced. This is also to allow the domestic manufacturers to import such raw materials at a lower cost and come up with more improved products in India. We also have revocation of anti-dumping duty, on import of purified terephthalic acid. So purified terephthalic acid is used in the textile industry. So this will boost the textile industry. This is particularly, anti-dumping duty that was earlier imposed for, this particular item being imported from Taiwan, China, and Thailand also. Moving on, we have national calamity contingent duty being actually revised, and for the cigarettes as well as the tobacco products, leaving alone BDs. So these were a couple of announcements made in the Union Budget 2020. FM Nirmala Sitharaman also indicated that the new return system as well as e-invoicing will come into force from 1st April 2020 as decided before. Thank you.